Hello investors, and welcome to my YouTube channel where I study the best investors and businesses from around the world. In this week's video, we'll be going over the rebranded Meta owned by Mark Zuckerberg and some of their market activity around 2021 and the first quarter of 2022. This video can be broken down into 5 parts. Number 1, an overview of Meta's 2022 position. Number 2, a little bit about Zuckerberg. Number 3, Meta and Reality Labs. Number 4, FOA, Meta's family of apps. Number 5, the future of Meta. Part number 1, Meta, as of quarter number 1 of fiscal year 22. Meta platforms have dropped by 47% since their all-time high in September of 2021. Year to date, in May 2022, the stock price is down 41%. Only 7 corporations in history have ever had a market capitalization of $1 trillion, and Meta Platforms was once a shining member of the $1 trillion club. However, just 5 months after reaching their high, their market worth has nearly halved. Meta is a long way from rejoining the club with a market value of $552 billion. In the fourth quarter of fiscal year 21, Meta had 1.93 billion daily active users throughout their family of apps, with 2.91 billion monthly active users. This equates to 36% of the world's population. Beyond financial worth, Meta has accomplished something that only a few firms could ever hope to do. Meta has grown and accomplished a lot since it was created by a few Harvard undergraduates in 2004. When a firm like Meta declines 47% in a matter of months, value investors take notice. A few important forward-looking challenges for Meta have shifted market perception. For starters, management expects total sales in the first quarter of fiscal year 22 to be in the region of 27 to 29 billion US dollars, up 3 to 11% year over year. That number is much lower than previous growth rates. The revenue growth rate of Meta during the 2010s has been substantially higher at 41.3%. Furthermore, Meta appears to be continuing to experience headwinds from greater competition for people's time from other social networking applications, as well as a shift in interaction inside the app itself towards video services like Reels, which monetize at lower rates than Feed and Stories. Another loss to the money-making schism comes linked to Apple iOS changes, which have an impact on advertising on the platforms. Meta will be unable to follow pixels due to implemented user privacy rules, resulting in significantly less granular advertising targeting. This might have a major impact on how marketers spend money on Meta's adverts. Capital expenditures, including principal payments on finance leases, are expected to be in the region of 29 to 34 billion in 2022, according to some experts. Reality Labs is projected to receive a percentage of Meta's capital expenditure. With an uncertain return on investment for investors, this creates a market that is filled with uncertainty. Meta also saw its daily average user count drop for the first time in its history. The number of daily average users was 1.929 billion in the fourth quarter of 2021, down from 1.930 billion the previous quarter. With such a dangerous position, leadership becomes even more critical to the company's future growth and success. In the following part of the video, we'll look at Meta CEO, co-founder, chairman, and controlling shareholder. Part number 2, the infamous Mark Zuckerberg. Mark Zuckerberg was offered $1 billion to sell his startup, Facebook, when he was 22 years old. The agreement would have netted Zuckerberg $300 million. A 22-year refusal Olds to sell despite everyone's advice reveals a lot about his character. After 15 years, the corporation is valued at $552 billion, representing a compound annual growth rate of 53%. The origin narrative of Facebook/Meta is well known, albeit primary in the Hollywood version from the film The Social Network. Their history isn't as essential as Zuckerberg's financial allocation and Meta's future prospects. Compared to other huge internet businesses like Amazon, Microsoft, and Google, the key distinction between Zuckerberg and Meta is Zuckerberg's willingness to make a concentrated bet on a new enterprise. Other large IT firms often take a more diverse approach, putting more money into the investments that are succeeding. Amazon's investment in Amazon Web Services is a perfect example of this. AWS is not an all-or-nothing investment for Amazon, but as it proved to be a profitable venture, Jeff Bezos poured additional money into it. Zuckerberg rarely invests externally, but when he does, it's usually a large stake that the market perceives as high risk. In 2012, Meta invested $1 billion in Instagram, which was still losing money at the time. The market reacted negatively, which is understandable given the price spent for a business with no income. In retrospect, we can see that it was a fantastic investment in a company that now has over 1 billion monthly active users and accounts for around 38% of Meta's overall income. Another example of Zuckerberg making an all-or-nothing bet that the market deemed excessive risk is Meta's $2 billion acquisition of Oculus in 2014. Even though Oculus is losing money and burning cash in fiscal year 22, he continues to reinvest enormous sums of money. Once again, the market sees Oculus as a high-risk investment, which is a legitimate conclusion for outsiders to reach. Zuckerberg, on the other hand, has demonstrated remarkable insight and execution throughout Meta's history. All of the previously so-called risky bets have paid off spectacularly. Let's take a closer look at Zuckerberg's risky dive into unreality in the next segment. Part number 3, Meta and Reality Labs. Meta is a corporation with which most investors are already familiar. Many of the 2.91 billion monthly active users are likely to be among the viewers of this video. Meta's family of apps, which include Facebook, Instagram, WhatsApp, and Messenger, has traditionally been an advertising business. With 10-year median free cash flow margins of 34.8%, this segment of the business is one of the most cash-generative businesses ever. The 10-year compound annual growth rate of that free cash flow is 45.1%. Meta appears to have changed its concentration to the Reality Labs division, which is focusing on virtual reality, augmented reality, and the more speculative metaverse. VR and AR, according to Meta, will become as ubiquitous and indispensable as smartphones and laptops are now. Reality Labs is working on everything from optics and displays to computer vision, audio, graphics, haptic interaction, full body tracking, perception science, and genuine telepresence to allow breakthrough AR glasses and VR headsets. Reality Labs boosted sales by 353% from 2019 to 2021. However, the company has become increasingly unprofitable, with a net loss of $4.5 billion in 2019 and $10.2 billion in 2021. This is an alarming amount of money that Reality Labs has spent. After deducting the loss of Reality Labs, the family of apps generated $56.9 billion in operating income, bringing Meta's overall operating income to $46.8 billion. Meta could see much lower margins and limited earnings growth if the growth of their family of apps continues to stagnate and Reality Labs' operating expenses continue to rise. Reality Labs' operational expenses in fiscal year 2021 were $12.5 billion on only $2.3 billion in revenue. Investors are betting big on Zuckerberg's capital allocation decision, which is burning through cash. On the other hand, if Reality Labs can become profitable and grow at a rapid pace, it will have enormous operating leverage. Oculus sold 8.1 million VR headsets in 2021, compared to 8 million Xbox systems sold by Microsoft. The revenue compound annual growth rate of Meta's Reality Labs between 2019 and 2021 has been 113%. If these trends continue, Oculus will sell more headsets than Sony does PlayStations by 2022. These estimates may come as a shock to investors unfamiliar with the VR and AR industry, as Oculus appears to be up against fierce competition from more traditional game systems like the Xbox. Despite this, Oculus sales have demonstrated that they're not a weak competitor in the market. During the Christmas season of 2021, the Oculus VR software was ranked number 1 in the Apple iOS store, which is a strong indication of the product's growing popularity. However, that place was lost and slipped to 166 by May of the following year. That could be taken in both favorable and unfavorable ways. On the upside, it shows that consumers are growing increasingly inclined to participate in VR experiences and spend money on the items. The downside is that it may have been more of a present that was enjoyed a few times after the holidays and then forgotten about. Consumers may try the product because they have a desire to do so, and they may eventually begin to incorporate VR into their daily lives more and more as the VR experience improves, and substantial improvements are nearly a guarantee. While it may still be a novelty in its early phases, the variety of users and ever-improving experience suggests that VR or AR will displace conventional HMIs. Oculus shipped around 68% of all VR headsets worldwide in fiscal year 21. In contrast to Valve, which costs around $1,000, Meta's Quest headgear is substantially less expensive than competitors, costing $200 to $300 per unit. Because they are the lowest cost provider, they have a stronghold on the market. Of course, the company's low-cost strategy is a reason for its capital burn, but it is probably a superior plan in the early phases of the VR market, because competitors like Sony and Apple have postponed the delivery of headsets until 2023 due to supply concerns. Meta is projected to enhance their market position during 2022. Meta is likely to be the dominating competitor in the VR and AR console industry in the short term. According to some experts, sales of VR and AR headsets will expand at a compound annual growth rate of over 30% during the next 5 years. If we consider Meta's Reality Labs' annual growth of more than 100%, there's a high likelihood that the growth rates will continue to be significant. Over the next decade or more, the key question is whether Meta can sustain their market share and be the market leader in VR and AR headsets. If the low-cost plan works in the short term and they establish a strong brand and excellent customer experience with Oculus, Meta has a good chance of remaining the market leader in 10 years. However, this comes with some uncertainty since Apple, Sony, and Google continue to invest in VR and AR projects. Although Reality Labs' actions have been primarily speculative, Meta's family of apps provide a reliable stream of revenue, making Meta one of the most cash-generative enterprises ever. In the next section of the video, we'll go over the specifics. Part number 4, FOA, Meta's family of apps. The Meta family of apps has continually been the world's largest social networking platforms. Facebook has been at the top of the food chain for a long time and will continue to do so in 2022. WhatsApp and Instagram are ranked third and fourth, respectively, while Messenger is ranked seventh with slightly over 1 billion users. Even if TikTok is likely to usurp one of those spots in the near future, Meta still owns 3 of the top 4 social media sites in the world. Meta's family of apps have collectively been the most downloaded since 2014. The market appears to have written off the family of apps completely after the first fall in daily average users in Meta's history. However, all 4 applications are still among the world's most popular social media platforms and will certainly remain so for a long time. It's also worth mentioning that Facebook and Instagram have historically provided the majority of Meta's total revenue. It's plausible to believe that the growth in the United States and Canada is virtually over and that future growth may even be negative. However, in Europe, Asia Pacific, and the rest of the world, average revenue per user may continue to rise, and daily average users may even rise as well. In the fourth quarter of fiscal year 21, the average revenue per user, or ARPU, in the United States and Canada was $60.57, compared to $4.89 in Asia Pacific and $3.43 elsewhere. These markets are vastly different and will almost certainly never achieve an ARPU comparable to that of the United States and Canada, but as economic conditions improve in these areas, ARPU is expected to rise. WhatsApp and Messenger have yet to be commercialized. Although monetizing an instant messaging platform may be tough, it is worth investigating because there's an untapped market of about 3 billion users between the 2 apps. The ARPU in the United States and Canada is expected to fall somewhat over the next decade, while the remaining markets are expected to expand. Although annual increase will most likely be modest, what matters most is the global ARPU, which is likely to stay stable or grow at a moderate pace of 2 to 5% per year. Meta bulls would undoubtedly argue that the growth rate should be higher, but it's safer to be cautious when analyzing future markets. Let's quickly consider the moat with strong brand and network effects. Kim Kardashian, for example, will continue to use Instagram because he has 283 million followers. That's a huge enterprise, and because he will continue to use it. So will his 283 million followers. And because his 283 million followers will continue to use it, so will other celebrities and brands. The 283 million followers will continue to use it because it's used by other celebrities and brands. Because of these network effects, out of the top 5 websites that people visit, 2 are owned by Facebook. And with each passing day that Facebook remains the most popular social media platform, the likelihood that Facebook will remain the most popular social media platform increases. Investors may be concerned about exactly that, Meta's future. As a quick reminder to viewers, please remember that this channel does not provide investment advice, rather, it provides an analysis, and that no investor has the ability to foresee the future markets. With that in mind, let's take a speculative look at where Meta may be in the next decade in the final part of the video. Part number 5, the future of Meta. To put it bluntly, Meta's future is unpredictable. Historically, Meta has been a reasonable, straightforward company to comprehend. It was a social media and advertising company with strong tailwinds, a large total addressable market, and consistent cash flows. Meta disrupted traditional advertising and formed an online advertising duopoly with Google, but both corporations amassed massive amounts of data that advertisers were permitted to use to increase their return on investment. Because there was little competition, Meta prospered. with a typical return on invested capital of roughly 20% since start and pre-tax margins of 39%. Prior to the quarter one decrease, shareholders had received a 30% annual return. In early 2022, the market conditions may have improved for Meta. Meta is facing significant competition and regulatory pressure as of the end of quarter one of 2022. There is a wide range of possible outcomes. The change to virtual and augmented reality represents a significant transformation in the business model, requiring significantly more cash and logistics. Meta's high-margin software as a service strategy may be on its way out. The shift to virtual reality and augmented reality is at the heart of the investment thesis. The VR and AR sectors offer strong tailwinds and a long runway for growth, which explains why Meta's revenue compound annual growth rate for Reality Labs is 113% from 2019 to 2021. We've witnessed amazing value creation stemming from manipulating user interfaces, often known as human-machine interfaces or HMI, throughout the digital revolution. A human-machine interface or dashboard simply links a person to a machine, system, or device. Traditional PCs and desktops dominated HMI in the latter part of the 20th century as they became smaller and quicker. In the early 21st century, there was a trend towards laptop computers, cell phones, and tablets. If the future of HMI is in doubt, Zuckerberg is likely to propose that some form of VR or AR device is the inevitable next step. Further speculation suggests that something like a direct computer-to-brain interface may follow. Elon Musk may be playing 3D chess with Neuralink, but Mark Zuckerberg is playing checkers with VR and AR. But in all seriousness, it's a safe bet that VR and AR will become the most popular HMI options. It appears to be unavoidable. Talking about the metaverse feels a lot like talking about the internet in its early days. As the building blocks of the new form of communication were being laid down, it sparked speculation around what it would look like and how people would use it. Everyone was talking about it, but few knew what it really meant or how it would work. However, with the metaverse pegged to become an $800 billion market by 2024, and with tech giants like Meta, Microsoft, Apple, and Google investing big money in making it a reality, it's time to find out what the impact of this might be. Without a doubt, this is a large industry that will transform the way humans interact with the world, but how can we know if Meta will be the firm that succeeds? Let's take a look at some of their buyback and capital allocation operations to see what we can decipher. Meta bought back nearly $500 billion in outstanding shares during fiscal year 21. They still had $38.8 billion available and approved for repurchases as of December of 2021. Regrettably for Zuckerberg, the $50 billion in repurchases were made at a far higher market value. In 2021, Meta's average price-to-earnings ratio was 27.7 to 1, whereas in 2022, it was about 15 times earnings. The good news for newer shareholders is that management is clearly willing to buy back large amounts of stock. It's probable that Meta will continue to spend most of its free cash flow on buybacks. Over the next 5 to 10 years, Meta's capital allocation decisions are rather limited. Due to regulatory opposition, large purchases are almost impossible. While Meta's market value is much lower, they may be approved for some acquisitions, but this is not something shareholders can count on. Internal investments are nearly always preferred over foreign investments. Because Meta has no long-term debt obligations and a small quantity of capital leases compared to cash flows, paying down debt is not an option. Dividends are an option, but They aren't the most tax-efficient method to deploy capital, especially since Meta has never paid a dividend or indicated that they will. Although there seems to be plenty of extra cash on the balance sheet, investors probably won't see high returns until this period settles. Meta is essentially constrained to either repurchasing shares or reinvesting funds into its existing companies. Although there may be significant reinvestment back into the Reality Labs parts over time, the prospect to reinvest in the family of apps company are limited. It's possible that up to 75% of free cash flow is devoted to stock repurchases. There is a reasonable chance that the number of outstanding shares may drop by 30 to 40% over the following decade. Although, assuming management follows the rational capital allocation route of buybacks, we will see large reductions in the total share count. Meta will continue to see relatively large amounts of dilution from stock-based compensation. Let's shift our focus to the valuation of Meta stock. Since 2011, Meta's return on incremental invested capital, or ROIC, has been phenomenal. The company's earnings increased from $1 billion to $39.4 billion. Over that time span, the ROIC was 29.4% with a 90.4% reinvestment rate. When we multiply these two numbers, we get a value compounding rate of 27%. Abdul Al-Rizwan of Mostly Borrowed Ideas used Michael Malbosan's expectation investing approach to arrive at an estimated IRR of 8% to fiscal year 30, which may be a modest estimate. An IRR of 9.5% might be a more generous estimate. Some of the important assumptions included repurchasing shares with 75% of free cash flows and 7% total revenue CAGR, with the majority coming from Reality Labs. Only a 2% CAGR in income was estimated for the family of apps. A return to 37% free cash flow margins by fiscal year 30 as Reality Labs reaches profitability, and less capital expenditures as a percentage of sales is required. And last but not least, a terminal free cash flow multiple of 10x in fiscal year 30 are also factored in. So what are your feelings on Meta? Despite the fact that Meta management has compared its current transition to Reels monetization to other successful content transitions, such as the switch to Stories, is this time different? What are your thoughts on user growth slowing due to increased competition? What are your thoughts on Meta investing heavily in the metaverse positioning that may not materialize for years? Are you optimistic or pessimistic about Facebook's recovery? If you're interested in Meta and a great deep dive, please visit my Substack where a written version of the video is presented. If you want additional resources about Meta, I suggest excellent write-ups from Frank Taber about valuation, the Acquired podcast to understand Facebook's IPO, and the Pomp Letter and Lewis Stevens at Seeking Alpha on general thoughts on Meta. Thank you for watching this video entirely till the end. Nothing helps me out more than y'all sticking it out until the end. We have a new Substack website where there's a detailed write-up of this video, and 2 deep dives are posted each week. Please consider subscribing to my Substack and this channel if you haven't done so already. Also, if you enjoyed this video, please like this video and subscribe to my channel so that I can continue to make videos like this for you to enjoy.